Welcome to CEO Connect, presented by CU Solutions Group. On this month's episode, we'll discuss innovation in mobile banking technology.
I feel a little old now when I think back to my first marketing class in college and that 1960s article on marketing myopia by Theodore Levitt. It seemed so cutting edge back in the 80s. But what does an article like that mean some 40 years later, and even more specifically for credit unions? Well, every credit union executive is surely aware of some of those concepts that were summarized in that article by Theodore Levitt. My short summary of the article goes like this. He talked about how focusing on customer satisfying processes is what really matters versus products. And that helps keep businesses, in this case credit unions, from failing like the railroad industry did, or at least the importance and relevance of railroads was greatly diminished because they failed to realize that they were in the transportation business rather than the railroad business. They tended to be product-oriented instead of customer-oriented and seeing how things were changing in this transportation industry. Railroads declined not because of the advent of automobiles and trucking and airplanes and even telephones, but because the railroad industry was guilty of marketing myopia. Well, could banks and credit unions fail for similar reasons? If they focus too much on their products and look at their business through the lens of products, checking accounts, auto loans, mortgage loans, credit and debit cards, ATMs, and even in the case of what I'm going to talk about today, a very narrowly focused 5-featured mobile banking product. Are banks and credit unions at risk of missing key opportunities to help members and customers with the important life decisions that relate to those financial services offerings? And if this were to happen abruptly or gradually, which fintech companies or other players would step in to fill the void and to meet those needs that are being overlooked by banks and credit unions? Even as credit unions scurry to keep up with larger financial institution innovation on basic features in mobile banking products like peer-to-peer or P2P payments, alerts, card controls, banking voice technology are among the features that are becoming more mainstream for larger financial institutions in their mobile banking offerings. Some banks like Barclays and HSBC have replaced passwords with voice recognition for identity verification. And a little over a year ago, Wells Fargo announced voice-activated balance checks and funds transfers, as well as plans to offer personal financial advice, or PFM services, through a blend of artificial intelligence and its voice-driven assistant. I recently tried a little experiment as I was trying to envision how credit unions could use voice recognition in their mobile banking product. I went into my credit union mobile banking product, and I got into the transfer section, and I pushed my Siri button, and I said, transfer money. And the reply came back, you'll need an app for me to help you with that. You could try searching the App Store. And when I clicked on the App Store link, up came this visual that basically gave me options for PayPal, Cash, Venmo, and Apple Pay Cash. So my iPhone sent me to the App Store and gave me those options instead of, obviously, my credit union mobile banking app providing that seamless connection to transferring money through my credit union's P2P feature. So we know now that PayPal has a third of credit unions members using the PayPal product. We also know that 2/3 of millennial members at credit unions already use Venmo. So are credit unions ready to be revolutionary in their approach to mobile banking by giving their members what they're looking for or what they're already using, but tied to credit unions' financial services features? Isn't that an example? If credit unions are not ready to do so, isn't that relevant to what happened with the railroad industry, because the railroad industry was too product-centric rather than seeing how things were shifting and changing in this much broader transportation industry that they were in? And what about Netflix? What did Netflix see that the cable companies failed to see? Of course, the list of myopic companies is endless. Many businesses fail to understand the basic marketing principle taught by Theodore Levitt almost 6 decades ago, that being that selling focuses on the needs of the seller and marketing focuses on the needs of the buyer. So the Royal Bank of Canada will soon allow customers to pay their bills on their Apple iPhone by simply asking Siri. USAA and Capital One customers can conduct banking activities with Amazon's Alexa. It appears that banks are using voice recognition either for identification and security purposes or, more recently, for customer service features within their mobile banking platform. A recent Accenture poll said that 76% of bankers believe that AI will soon become the primary point of contact between banks and customers. And a recent study by the Federal Reserve Bank of Boston, published in December of last year, in 2017, surveyed financial institutions about their mobile banking and payment practices and plans. This was done in 7 Federal Reserve districts across the country. Now, some of the findings from that research weren't particularly surprising, but others give credit union leaders a potential roadmap for a strong mobile strategy moving forward. Not so surprisingly, mobile banking services, according to the survey, are now ubiquitous, and all financial institutions are now focused on driving usage and engagement as opposed to simply enrolling members and customers in the mobile banking product. The challenge, of course, is that it's very difficult to differentiate financial services of any kind. Most financial services products are commodities, obviously, auto loans, mortgage loans, checking accounts. But the fact is now mobile banking is also a commodity because of the way that banks and credit unions seem intent on limiting themselves to a core of 5 or 6 rather boring features. Let's face it, they are the most expected features in a mobile banking product. That being account balances, money transfers, account history, bill pay, perhaps an ATM and branch locator, remote deposit capture, and maybe enrollment processes for the mobile banking product. Those are all the basic features that literally every bank and credit union mobile banking product have. And in most cases, the mobile banking product is limited to those features. So the challenge here is twofold. First of all, if all banks and credit unions are doing basically the same thing with their mobile product, how do credit unions stand out as the little guys? How do credit unions differentiate their mobile banking product to be able to get people to appreciate and be wowed by the credit union checking account and mobile banking product? The second challenge is, in stark contrast to Levitt's guidance, these same sort of tired or expected features appear to reshuffle the same deck of services rather than evolving to meet member and customers' evolving needs. At least in the second case, they may not be going far enough to identify and serve those member needs. In my opinion, the starkest example of modern-day mobile banking myopia may be that most credit unions don't yet have a good P2P solution embedded in their mobile banking app, at least not one that's widely recognized or already used by members. I gave the example of PayPal and Venmo. And PayPal and its Venmo product are meeting those needs of consumers on an increasing basis in terms of the market share that PayPal and Venmo have. So the question really becomes, are credit unions doing what they ought to do to message the use of the credit union-issued debit card in conjunction with PayPal and Venmo? In addition to reinforcing the obvious points that all financial institutions want to offer an affordable and high-quality mobile banking experience for their members and customers, and that most consumers now expect that from their financial institution, this Fed report also had a number of findings worth noting. One, standardization makes mobile banking another commodity. I mentioned that earlier. Banks and credit unions have standardized their mobile banking features around those 5 or 6 things that I mentioned: balances, transfers, history, bill pay, locators, remote deposit capture, and mobile enrollment. A second key finding of the research was that the features that are coming soon, that the more progressive banks and credit unions are working on, include P2P, external account-to-account transfers, alerts, card controls, member education, and security features. There's a growing realization that the mobile app should educate and inform as well as enable transactions. Another example of something that many financial institutions are looking at is a mobile banking product for their small business customers and the integration of a personal financial manager or PFM type product into the mobile banking platform. A third key finding of the research is that FIs are partnering, obviously, for mobile payments. It's kind of a, if you can't beat them, join them approach right now. Financial institutions remain interested in pursuing mobile payments through partnerships, and more than half of those surveyed are considering NFC contactless solutions as one of their features. However, this strategy remains elusive to banks and especially credit unions, and a lot of uncertainty exists in how to get there, and so the partnering is occurring with Apple Pay, Android Pay, Samsung Pay, and in some cases large retailers with QR code functionality. Certainly the large retailers are achieving much greater success, the best example being Starbucks, with their customer apps that provide rewards with QR code-based payments at the point of purchase. And so this, if we can't beat them, join them approach is something that most banks and credit unions are adopting when it comes to mobile payments. A fourth finding of the research, security and education go hand in hand. For consumers not yet using mobile banking, security concerns are the main impediment. 70% of those surveyed said that the main reason that they're not using mobile banking is their concern about security. This is driving banks and credit unions to realize the importance of consumer education regarding security features, as well as implementing alerts, biometric authentication, voice recognition, tokenization, and card control features. A fifth finding is that, and we know this in the credit union sector, it's not easy being small. Well, there's no huge surprise here for credit unions. The smaller banks and credit unions find it much more difficult to invest in the technology to be able to add the features like voice recognition to their mobile banking platform. So this suggests that credit union collaboration and partnering are more important than ever. A sixth finding is speed. When it comes to P2P money transfers, the consumer is expecting those transfers to happen instantaneously. And so when money center banks formed or created the product Zelle that they are offering to their customers, they've labeled it the Venmo killer. One of the features of Zelle is to provide real-time money transfers. That has pushed PayPal to get better with their PayPal and Venmo products in getting to the real-time money transfers as well. So that's a good thing for consumers. The number 7 finding is that banks and credit unions need to have comprehensive mobile strategies instead of approaching it in a piecemeal manner. No credit union or bank, regardless of size, can afford to be without a comprehensive mobile banking and payment strategy. We simply need to find the resources and the partnerships to help credit unions of all sizes do that. Offering the basic services is no longer an option, it's an expectation. The focus is now on usage, engagement, and education, as well as cross-selling financial institution products and services through the mobile channel. And all credit unions should want to differentiate by adding these kinds of features to the mobile banking product. In fact, lest we want to play catch-up, this may be the time to look at artificial intelligence and voice recognition integrated within the mobile banking app. This is something that CUSG is looking at doing, looking at how we can partner to have a strong voice recognition and AI feature embedded in our LifeSteps wallet product that helps credit unions achieve that. An 8th finding from the research is that marketing and education intersect. If you build it, they won't necessarily come. And that's true of mobile banking. It's certainly true of the LifeSteps wallet product that we are now rolling out to credit unions across the country. Marketing and education messaging must overcome consumer misperceptions about security, data breaches, identity protection, and the biggest one, that my bank or credit union lacks the sophistication to help me with my life's big decisions. So the question remains, what should come next for credit unions' mobile banking strategies? Well, here at CUSG, we believe that hundreds of credit union clients using our web-based and mobile banking solutions can depend on us to do the research in rolling out next-generation products to enhance their mobile banking and mobile service delivery programs. It's our most current product, LifeSteps Wallet, that will help credit unions with their 2 most important marketing challenges with regard to mobile: how to differentiate mobile banking and how to focus on the needs of the member versus the credit union's own products through a myopic product lens. Let's just admit it, most people think that banking is boring. It's a necessity, but it isn't sexy. Consumers expect the basics, but they're wowed by features that don't look like traditional banking. The same is becoming true with mobile banking. Keeping an app pure, secure, and uncluttered is a noble goal. But taken to the extreme, it has the effect of making credit unions' mobile banking look just like every other bank mobile banking product in the market. So, CU Solutions Group's LifeSteps wallet creates a custom mobile banking app that wraps around the core mobile banking product of the credit union. Those 5 or 6 standard functions can still exist with security and clarity within the mobile banking product that you offer your members. But LifeSteps Wallet will expand the resources available wrapping around your mobile banking product and adding features and functionality in categories of shopping, auto, home, ownership and maintenance, and financial wellness needs that members have, including things like identity protection, card protection, financial education, and many other features. So credit unions should approach mobile banking like Maslow's hierarchy of needs. Consumers expect the bare minimum 5 or 6 features, but they won't be wowed into doing business with the credit union or bragging about their new mobile banking app until the credit union truly helps them reach that next level with P2P, peer-to-peer money transfer integrated, preferably the PayPal and Venmo products that they already know and use, external account-to-account money transfer capability, and tiles within the mobile banking app or LifeSteps Wallet app that enable and help members with researching big purchases, with their shopping, with helping them buy and maintain those big purchases, most notably their automobile and their home, all aided by the credit union's financial services. Reaching for an even higher level in the hierarchy, the integration of voice recognition and artificial intelligence seem to be the next big thing in mobile banking. It may be a long time before even a small number of credit unions can rival the voice recognition chatbot capability of Bank of America's Erica product or American Express's voice integration with Alexa. But what they can do is innovate in other ways that differentiate credit unions in the marketplace. We believe that LifeSteps Wallet is one example of how credit unions can do that. Through a CUSO, CU Solutions Group, that has invested millions of dollars in a truly different mobile banking strategy that will help credit unions of all sizes stand out from the pack and focus on members' highest priority life's big decisions needs, complemented by the credit union's financial services. We kind of look at it as a suite of mobile banking enhancements that doesn't require you to replace your mobile banking provider. These features just wrap around and complement what your mobile banking product is already doing. Credit union financial services can be an important driver for helping to meet member needs in these areas of life's big decisions. But putting the needs of the buyer, your member, ahead of the seller, in this case the credit union, and the credit union products, will help credit unions avoid marketing myopia in the mobile banking world. And it will help your credit union grow and prosper in the age of Siri, Alexa, and Samsung's Viv, as well as other technologies that are disrupting the marketplace, not just in banking, but in all types of researching and buying products and services through the mobile channel. CUSG is committed to investing in the research and the product designs that will help credit unions avoid the pitfalls of marketing myopia with regard to mobile banking and other remote service delivery technology, marketing services that credit unions need to have to communicate with their members, and HR performance solutions. That's our niche, technology, marketing, and HR performance solutions. And we hope that our credit unions nationwide will partner with us and collaborate with us to help us understand these evolving needs of your members so that we can invest together in great products that help credit unions be different and help credit unions wow their members.